My name is Darren Joseph from HJ.Tax. We're the team that seeks to demystify the sometimes confusing world of cross-border taxation for private clients. And today we have the honor and the privilege of having a conversation with the one, the only Leonardo Marquez dos Santos. Leonardo, please, could you introduce yourself?
Thank you very much for having me, Darren. I'm a tax lawyer based in Portugal, partner of Miranda & Associates, also tax law and international tax law professor here at Portuguese Catholic University. And that's it.
Wonderful. Which is, to be fair, equally perhaps nuanced, which is the idea of U.S. pass-through entities. Because in the U.S., I mean, there are LLCs, or limited liability companies, but there are also S-corps, which are also pass-throughs. The question becomes, generally speaking, how are those viewed by the tax office?
Yeah, very good question, and very well posed, if I may say. Because when I was studying, and we read the partnership report and all of that, and then when we come into our desks and to our actual practices, things not always match. So what I know, the Portuguese tax authorities have a ruling from an American LLC, right?
Correct.
It's a partnership, and they say something like that. Even though the LLC is deemed transparent, it's a partnership and is deemed transparent, that transparent will not equate transparency from a Portuguese standpoint. So Portuguese will look at it and will apply its own version or its own views of what is transparent. And according to Portuguese law, will be deemed transparent companies in which the shareholders are only professionals, let's say architects or lawyers, which are listed in a closed list, or for instance, companies that only exist to manage the personal estate of the shareholders. So in those cases, there is transparency, but it's a concept very well defined under Portuguese law. If the LLC also presents the same features, we will treat it as transparent. If not, we will look at the income that flows from the US to Portugal and we'll treat it as a profit. And we have, you may or not know, it's the I'll explain. So Portuguese personal income tax is divided in 6 boxes of income. It's a scheduler system. One of the boxes that treats or includes what we call capital income, which has dividends, interests, income from participation units in funds, and it will be considered sort of a profit, and we will tax it at the 28% rate, which applies to other capital income. This is from our domestic standpoint. What will happen then is we will apply the tax treaty, and according to the tax treaty, that flow of capital will not fit the notion of dividends for treaty purposes. So Portuguese tax authorities just defend that is treated as other income, Article 24, other income. And if it comes from the US, it's both countries can tax and there will be a credit. So this is, and there was transparency issues are obviously very tricky. Even for, let's say, residency purposes and treaty entitlement purposes. But Portugal, to the best of my knowledge, will tend to follow the documentation that is provided by the country of residence. And if there is a document saying this entity is deemed resident for tax purposes, then we tend to accept it is an entity and it is entitled to it has treaty entitlement.
Okay, so and I understand, of course, appreciating the fact that Portugal is a civil law jurisdiction, so these findings or these determinations are non-binding, not legally binding, as they would be in a common law jurisdiction like the US and the UK, right? But in that particular circumstance, that particular case, I believe the Portugal tax resident was a limited partner. So they're not involved in the day-to-day running the business. And the business had economic substance. There were real substance in the US. There are people sitting boots on the ground in the US who were actually running the company. So, I'm just kind of pointing that out because I would imagine theoretically, if it is that, let's say the other extreme, it were a single member LLC. So there's no substance at all in the US. From a US point of view, it's a shell company. It's totally transparent, doesn't exist. Then and this is my question now, would Portugal see it slightly differently?
Yeah, I would say so, yes. I would say so. First of all, just to clarify, This ruling was from the Portuguese tax authority. It's, as you said, it's non-binding to all the taxpayers except for the taxpayer that actually asked for the ruling. So it binds the tax authorities in that specific case, but it doesn't apply. Well, obviously, my opinion is that we cannot ignore it because, in a way, the tax authorities have expressed their ruling. It's of public knowledge. They should publish the ruling. So it's something that I cannot ignore if it exists. I can challenge it. I can apply and go to court. But it's something that I cannot just ignore. But I think you're right. If you just have a company in the US and the sole shareholder is in Portugal, and what I'm assuming is that the actual activity of the company is undertaken by the partner, the shareholder in Portugal, and the entity there is simply a vehicle. That way, I would say it would be deemed transparent. But that in that case, the company would be perceived as transparent also for Portuguese law purposes, and that's a different thing. And in all fairness, there has been an interview by the State Secretary of Tax Affairs just this week, saying that they were going to be looking at transparency with more care. And there has been a few public cases of companies which were harboring the activity of the shareholder. Some of them of public knowledge. For instance, I think I can share all this. So it wasn't on news. So our national coach, soccer coach, was paid through a company, and there was a decision by the arbitration courts. There was also a decision by a very known plastic. You don't use the expression plastic artist, right? It's just artist. Right?
Yeah, just artist.
Just artist. Yeah, this artist, very known artist that was using also a company. And so there, for a number of years, I don't think transparency has really been an issue, even though it's not in the law. So I haven't seen it being targeted by the tax authorities, even though the features for a transparent entity exist in a specific entity. But I haven't seen tax authorities going, auditing them, and actually applying the transparency rules. But in that case, I would say transparency rules would apply. That's an issue.
Okay. And just to throw another layer of interest or complexity, let's layer in the NHR now. And let's say that it was like the previous scenario where there's real substance in the US. The tax resident in Portugal is a partner who does nothing. All the heavy lifting, all the economic activities taking place in the US. In that scenario, as established by the ruling, the non-binding ruling, capital income, 28%, or when 28% goes up to 48%, it'll be whatever it is, it'll be taxable. Now, some people are having a conversation saying, hold on, we can then, what about the NHR? What about the treaty? Shouldn't this not be taxed by Portugal?
Yeah,
have you heard that conversation?
I haven't.
Okay.
I haven't, but I mean, if the tax authorities say that this is capital income, capital income should be exempt in Portugal as long as the income is taxable in the other country in accordance with the tax treaty. So in the specific case of the US, because there is both countries can tax, because a lot of tax treaties, it's exclusive. The taxing powers rest exclusively the residency country, right? But in the case of the US, if the money flows from the US can tax, and Portugal can tax as well. So if the income is taxable in the US, I would say it should be exempt in Portugal. I wouldn't say that this would apply to all other tax treaties that we have because the allocation is different. But I would say that following the reasoning of the tax authorities, which is Article 24 will apply, meaning both countries will have taxing powers, meaning the residence country will have to grant a credit. I don't see why there should be a taxation in Portugal. Now, one thing is to say that there should be an exemption in Portugal, but I mean, what counts is overall tax burden. And what in the case of dividends, because the withholding tax is generally limited to 15%, according to most tax treaties, overall tax burden is 15%. If you have more taxation in the US on that income, even though exempt in Portugal, the overall tax burden may increase.
If the person is a US taxpayer, which I guess most clients that we deal with, they tend to be US exposed, then they'll be taxed, or at whatever the ordinary income would be, depending on the nature of the income.
So high.
Yeah. So yeah, it'll move up and down. If the person is not a U.S. taxpayer, then they'll be subject to withholding. The default for FDAP, fixed determinable annual periodic, is 30% or less by the treaty, which, as you pointed out, could be 15%. So it depends on whether the person is a U.S. taxpayer or not, even though resident in Portugal.
Yeah. So not good. And at the end of the day, we can, even though there may be an exemption in Portugal, the overall tax burden will be higher than if you have an opaque company. But then if you have an opaque company, you have more taxation there, right? You have two levels of tax.
Yeah, depending on the nature of the income. Yeah, you're correct. There'll be state and there'll be federal of whatever your marginal tax rate will be. So you're right. Yeah.
Yeah.
Okay. So it's interesting. So we see people adopting the position, I'm going to obviously declare the income, but I'll declare that it's not taxable by Portugal and kind of sit back and see what the Portugal tax office does about it. Right.
Okay. No, but even though even though benefiting from the exemption, you still have to declare it. You have to declare.
Yeah, of course. You declare it.
So you will declare it in the way you think it's accurate. So you would say, if from a Portuguese standpoint the company is opaque, I will treat it as a dividend, and this is my opinion, and it's an opinion that seems to be backed up by the interpretation of tax authorities. If it is transparent from our standpoint, I will just declare it as income, but not necessarily as a dividend. So, but taxable in the other country. Yeah.
Okay, gotcha.
So if you're a 6, 7, or 8-figure investor, entrepreneur, or business owner who needs a tailor-made solution from a qualified team of professionals, we can help you achieve the international lifestyle, the freedom, and even the tax savings you're looking for. Visit us at htj.tax and live that international life.